Well, in relation to our financial results, the year was quite pleasing because we're at the upper end of our guidance for EBITDA at 47.3 million and revenue of 508.3. So quite a good performance, and that was given in a mobile market, which was again very competitive, and also an energy market that was suffering from the overhang. Now, to give you some feel for how mobile went, we still have 34% of the MVNO market, and we also maintain our margin of 34%. So there's strong performances in a very tough environment. In energy, despite the regulatory overhang, we reached 207,000 customers, which is a growth of 8.3% in the year. So I'm quite pleased given the circumstances. The capital raise of 50.6 million earlier this year was very successful. 97% of our institutional investors took up their rights. A number of the KMP, the key management team, also either took up rights or bought into the business. It was a sign of strength and support for the company. The deployment of those funds are being very carefully managed. As we announced to the market, a big amount, about $30 million, was used to pay off principal of outstanding loans, and we were able to, on that basis, to convert our loans to interest only, which saves the company a significant amount of cash outlay each year. The balance of the funds are going into various initiatives, strategic initiatives. First is renewal of our software stack. We're actually developing it, bringing it into the 21st century, improving our customer engagement tools, our billing systems. We've signed a contract with Xura, which is a specialized subscription billing platform that is working very well for us. And we'll also have other initiatives in development in technology, which will be rolled out over the next 2 years. And this aids the agility that is a key facet of the way a company like ours operates in the market. Mobile has benefited from the capital raise. We've flagged a massive increase in marketing spend, over $15 million increase this year in mobile. Immediately we signed our new wholesale agreement with Optus. We started back in the market, actively acquiring customers, and that's been very successful. We saw an immediate uptake in net adds since June when the agreement was signed. In energy, we also launched the subscription product. We've been incubating that for most of this year. We've had a soft launch in Victoria in April. We've turned the product on in New South Wales and Queensland for testing. We expect an official launch of that product across the eastern seaboard in the last quarter of this calendar year. So the money's being well spent, it's being invested in growth, and it's being invested in a way which will get a return for shareholders. Amaysim has a couple of big challenges over the next 12 months. First of all, in energy, we have new regulations both in Victoria and at the Commonwealth level. Both the state and the Commonwealth bringing in default offers, which will bring margins down, and we're ready for that. And our products that we're now selling in the energy market are products that don't rely on price increases, but actually come with margins that are meeting the market, the requirements of the market. In addition, we will have a formal launch of our subscription products that have been in the market for a while, but they're really a soft launch while we're testing and trialing various aspects of that product. We think that will have a very positive response in the market, and it answers many of the complaints that customers have from existing energy products, particularly with the front book, back book model, where they get price rises randomly throughout their lifetime with a particular provider. So we want to solve that problem for energy customers. In mobile, it's going to be a tough market. It's been a tough market for the last 2 years, but there is some relief. What we're seeing is that the MNOs, the big carriers, the three of them, are now thinking about how they're going to fund their 5G networks and it subsidizes the handsets for 5G. And therefore, what we will see a lot more of is the big carriers competing in the higher ARPU products and also trying to make some profit in the sub 40 category. And we'll compete quite well with our new wholesale agreement where we're strong, the 40, 30, 20 and 10 categories. So there is some relief there, but mobile will continue to be quite competitive for the next 6 months. For the full year 2020, I'm really looking forward to it. I think we will continue with the investment in our software stack. This is a fundamental investment for the company. I'm very excited about it. Any phone company in the world wants to get one view of its customer. And of course, we want to bundle energy and sell into the mobile base. And we want to use our software platform to actually introduce other products in due course. So that software stack is very important to keep the Amazon brand alive for new opportunities, but also when we have those opportunities to actually serve the customer in a way that they want to be served and recognize them when they come to do different things with us. That's going to be a big breakthrough for us over the next 12 months. The subscription energy product is another point of excitement. We're designing this specifically from what we've learned about what customers want. Subscription is our core competency. To do a subscription product, you have to stand in the shoes of the customer and actually build the product from the ground up. And that's what we've been doing. It's been quite a long process. It's quite a painstaking process. And now we have to market it because we have to do exactly what we did in mobile. Come to the market with a different product paradigm or construct and explain what that means to the average energy buyer. And we have a way we're going to do that. And we think it's quite exciting. In mobile, it's really taking advantage of our new wholesale construct with Optus. That gives us that agility, excitement, ability to meet the market, ability to serve our customers and bring them on the data journey with us. And that's going to give us the flexibility we've wanted for several years. So it's a tough market in energy for regulatory, tough market in mobile due to the competition, but we think we've got ourselves in good shape with a reservoir of funds for marketing, plus a new software stack we're building, plus a new product and wholesale agreement with Optus. We think we've got the tools to actually take advantage and go into growth mode solidly for the next 12 to 24 months.